Very good morning, everyone. How are you all? Very fine. Last class we completed which chapter? We have not completed that chapter. We completed ESOP. ESOP, any doubt? Have you tried questions? Which questions? Which I have done or which I have not done? Test your knowledge. I hope if you have tried, you are getting all the answers. Correct? Any doubt? Doubt is there. Chalo. Let us first do doubtful question. So we need to go to which question you have doubt? ESOP. Question number 6. Everyone come to question number 6. This question. At the beginning of year 1, Harmony Limited granted 600 options to each of its 1000 employees. The contractual life of option granted is 6 years. You can see vesting period 3 years, exercise period 3 years, expected life is 5 years. Means even though exercise period is 3 years, they are expecting that all the employee will exercise at the end of fifth year. Correct? That is expected life. Exercise price, market price. You can see here market price and exercise price is same. I have also informed you that. Correct? So in this case, intrinsic value become what? 0. But it will have some fair value. So it is a good question. Understood? So all the concept what I have given, it is coming in this question. Expected forfeiture per year is 3%. But per year expected forfeiture means the employee will leave the job at an average annual rate of 33% every year. The option granted vests according to the graded schedule. Acha, this is a concept which I have not done. Okay. A new a new question was asked in exam about graded vesting. However, previously there was no question of such nature in ICA study material. So we used to discuss correct now, but immediately one new question was given about this. So this is a new concept which I have not taken. Let us take that concept. Very good. So option granted vest according to graded schedule of 25% at the end of year 1 and 25% at the end of year 2 and remaining 50% at the end of year 3. What is the total option per employee? Total option is 600 option they have given per employee. So 625% how much batao? How much 625%? 625% is how much? 150. It means 150 will be vested at year 1. Means for 150 option what is the vesting period? Year 1. And for next 150 the vesting period will be what? 2 years. And for remaining means 300 the vesting period will be year 3. Correct? Understood? So can you say because fair value depends upon the life of the contract. So if the life will change, the fair value of option in this particular group will also change. Correct? Means can I say in one plan there are three groups that is known as graded vesting. One plan is announced with three group. First group is what 150 option. Second group consists of 150 option and third group consists of 300 option and the vesting periods are different. Now you will see they will give you what? Some more information. You are required to calculate total compensation expense for the option expected to vest and total compensation expenses for the option expected to vest and the cost and cumulative cost to be recognized at the end of all 3 years, assuming that expected forfeiture rate does not change during the vesting period when the intrinsic value of option on the grant date is 7 per option. Now they have given intrinsic value of option on grant date. Intrinsic value of option on grant date means they have not given fair value of option. If they have not given fair value of option, thank you very much, we'll do as per intrinsic value of option. Correct now. But from my point of view, just try to understand. If you come to the concept says what? That is market price is given, exercise price given. So intrinsic value is market price minus exercise price. Therefore, intrinsic value is 0. But in this question, intrinsic value is given how much? 7. In exam, if suppose the same questions come, will you fight with the question? There is no need to fight with the question. If some information is given in the question, I will say use that information. Don't fight with the question if the question is against your concept. Now, as per your concept, intrinsic value must be equal to 0. But as per question, they are saying intrinsic value is equal to how much? 7. Will you fight with the question? Don't fight with the question. Whatever information given, that you use. Correct? Understood? It means, can I say in this way, everyone? We are doing which question? Question number 6 of test your knowledge. Which chapter? ESOP chapter. ठीक है ना? Correct. So first we write on year end. Year end is what? 31st March. Which year end? They have not given year, na? Okay. We write on year end 1, 2, 3 like this. They have not given date. So better we write on year end 1. Year end 1. Correct. Now in year end 1 there are 3 group. Group 1, group 2 and group 3. Correct. बताओ. Group 1. Group 1. First, we need to find out number of employee expected to best the option. They are saying 3% annual departure rate. So can I say 100 minus 3% will do? 100 minus 3%. The first plan, can I say it will be 100 minus 3%? Or can I say you can do 100 into 97%, both are 7? Either you will do 100 minus 3%, or if you do 100, what? Into 97%, both are same. Means 97 employee will vest the option at year end 1. Are you getting? So 1000 employee. So I'm writing 1000. Okay. 1000 employee. Have you understood this point? So 1000 employee. This is number employee who will actually vest the option at year end 1. Multiplied by what? Option per employee. So in group 1, what is the option per employee? 150. Very good. And what is the intrinsic value? 7. And what is the vesting period for group 1? 1. So we'll do 1 by 1. What is the cumulative expense? It is 10 lakh 18,500. Correct. Now, for group 2, what we will do? 1000 employee. But for this, what is the vesting period? 2 years. It is given that 3% employee will leave in first year and second year. 3%, 3%. So 3% will leave in first year and then 3% will leave in second year. So if you want to find out how many employee will actually vest, you will do into 97%. Into 97%, bolo yes or no? Have you understood this point? 3% will live in first year and 3% will live in second year. So first we'll do 1000 into 97%. Then 97% of that amount. Not understanding. It means I need draw. I need draw. This is 1 year, 2 year, 3 year. Can I say for group 1? For group 1, vesting period is what? 1 year. For group 2, vesting period is what? 2 years. For group 3, vesting period is what? 3 years. This you have understood? Correct. Now for group 1 will be vested on this date only. So how many employee will vest? 1000 into 97% we have done. Correct. But group 2 will vested यहाँ पर. It means some employee will also leave in second year. Some employee will also leave in second year. So it is given that it is 3% annual departure rate. So how many employee will be expected to vest the option in second year? It will be 1097% into 97%. 3% employee will live in first year and 3% employee will live in second year. Understood? Correct. So we'll do like this. Into how many options? 150 into what? 7 into what? Very good. It will be 1 by 2. How much? 4 lakh? 4,93,972. Okay. Or you can say 3, rounding off. Then for the last group, it is 1,000. But how many employee will leave? 3%, 3%, 3%, 3%, 3%, 3%. Bola re. Correct. So it will be 97% into 97% into 97%. Correct now. What you can do to avoid this decimal? What you can do? 1,000 into 97% into 97%. Correct. Okay, ठीक है. बताओ. This is coming how much? Into how many option per employee? Into what? 7. Into what? 1 by 3. How much coming? 6,38,875. 871. What is the total expense? What is the total expense? So can I say this become cumulative expense and this become expense. So for this to expense will remain same only. Writing same. What is the total? 21 lakh 51,344. 21 lakh 51,344. Have you understood? Now let us come to year end 2. So can I say year end 2 group 1 plan will be vested. It will be exercise also. So now we'll not consider group 1. We'll consider group 2. So once again same number employee because they have said it will remain 3%, 3% only. So now we can directly write down number of employee if you want to write down. So into 97% into 97%. It is coming how much? 940.9. Now normally what we should do, we should take number of employee as whole number because it cannot be 0.9 employee. So better you should take 941 employee. Correct. 941 employee. 941 into what? 150 into what? Correct. Into what? 941 into 150 into 7 into what? 2 by 2. How much it is coming? 9,87,000. 9,87,000 minus, can I say we'll do this? Minus this. So you will get the expense of second year. Expense of second year. So you can do 9,87,000 minus 4,93,973 is equal to how much? 4,93,027. Have you understood this point? Follow. For group 3, can I say how many employee? Can you give me how many employee? It's coming 1,000 into 97% into 97%. How much coming? Into 97% into 97% into 97% means 913 employee. 913 employee into 300 into 7 into 2 by 3. Correct. How much? 12,78,200. 200. From this you will minus what? This you should minus this. That is coming how much? 12,78,200 minus 638,871 is equal to what? 6,39,329. Understood? बताओ. Have you understood? Actually difference is coming why बता, क्योंकि यहाँ पर we have taken what decimal. If you would have taken the whole number employee, the same amount would have come. This 4,93,973 and 4,93,027. This is coming because of decimal we have taken in initial. However, here only we should do rounding off. Are you getting what I am saying? So you should in exam now you take number exact number employee. Means for this you take 941. For this you take how much? 913 employee. Are you able to understand what I am saying? And for this 970 employee. Are you getting what I am saying? Hello. What is the doubt? Means if you will take that employee, so same check karo what answer will come. If you will take 941 employee into 150 into 7 divide by 2, it is coming how much? It will come 4,94,025. Correct? And this is coming 9,87,000. If you minus 9,87,000 minus 4,94,025, same amount will come. It's coming how much? 4 lakh. Something wrong? 941 into 150 into 7 into, this is wrong. You have say given me wrong amount. Okay. 9,88,050. From this will minus what? 4,94,025. How much coming? Same amount is coming na? It will come same only. Understood what I am saying? It is 4,94,025. Same thing, if for third year for year 1 will take, so that is 913 employee into 300 into 7 divided by 3. How much it is coming? 6 lakh 39,100. So this will be also 6 lakh 39,100. Are you getting what I am saying? 6 lakh 39,100. Correct? And this will be now become 12,78,200 minus 6 lakh 39,100. So you can see same amount is coming 6 lakh 39,100. Have you understood this point? 6 lakh 39,100. Correct? You can make a total of this. Means I have said convert employee into whole number employee. So then that decimal will not come. Correct now? So initially I have taken what? Decimal in employee, that I have corrected. Now understood? Correct? Now for third year we'll take what? Only which group? Only third group. So that is 913 employee into 300 into 7 into 3 by 3. Correct now? So 913 into 300 into 7. How much it is coming? 19 lakh 17,300. 17,300. 17. I written 17 only. 17,300 minus what? Minus this will do. So minus 12, 78, 200. It is coming same 6 lakh 39,100. And this become total of third year. Got it? Question was easy. Have you understood? This type of question is known as graded vesting. This type of concept is known as graded vesting, in which one plan has been divided into 3 grades. Have you understood this point? If you check with the answer whether same is matching, Amount is matching. First year is 10 lakh 18,500. Our answer is what? What is the total of these three? Acha, they have given this only. 10 lakh 18,500. Okay. Then second year it is 9 lakh. What they have done? Acha, they have done decimal. Chalo, theek hai. They have taken decimal. I have ignored that. But chalo, approximately same answer is coming. Approximately you can see same answer is coming. Okay. Understood? So they have not done what rounding off. We have done rounding off. But for that marks will not be deducted. Okay. Chalo. Have you understood? For rounding off, no, no, note is not required. For that note, rounding off we can do. Rounding off is permissible. Okay. Have you understood this? Chalo. I think only one question doubt. That also a new type of question. Similar type of question doubt will not come. Cool. You need to copy mine. This one to copy karna. Till now you have not copied. You want to avoid mistake. Next time I will not give time. Huh? Chalo. You copy. I will drink coffee. Have you understood? Simple. Hmm? First year cumulative expense and expense will be always same. In previous question also you can see cumulative expense and expense of first year will be always same because previous year is nothing not there. Just check of previous question whatever we have done. First your doubt why he is asking. You have doubt na. You should ask. And why you asking his doubt? What? Acha, this I have not changed. Change it na. 4,94,025. Now okay. Now okay. It will be always same. First year cumulative expense and expense will be always same. Done? Chal. Can we come to the next chapter? Buyback. Buyback. Okay. So buyback already we have covered all the concepts. Correct. Any doubt in previous concept of buyback? Have you understood maximum number of equity shares which can be bought back during a financial year? Were three conditions. First is which condition? Shares outstanding test. Second condition is what? Resource outstanding test. Third is what? Debt equity test. Have you understood debt equity? Yes, sir. Now come to question number 6. A very good question. A very good question. Question number 6. Extra Limited furnishes you with the following balance sheet as on 31st March 2001. You can see balance sheet, beautiful balance sheet has been given. Share capital, reserve and surplus, non-current liability, long-term borrowing, current liabilities. They have given trade payable, non-current asset, property, plant and equipment, non-current investment, cash and cash equivalent. Okay, sir? Yes, sir. Share capital, they have given equity shares of rupees 10 is fully paid up, 9% redeemable, preference shares of rupees 100 is fully paid up. Then they have given reserve and surplus, capital reserve, revenue reserve and securities premium. Correct? Long-term borrowing, there is a 10% debenture. Point number 1. The company redeemed the preference shares at a premium of 10% on 1st April 2001. Redemption of preference shares, we know. Point number 2, it also bought back 3 lakh equity shares of rupees 10 each at rupees 30 per share. The payment for the above was made out of used bank balance. This also we know. Then read point number 4. First read point number 4. The company had 1 lakh equity stock outstanding on the above mentioned date to the employee at rupees 20 when the market price was 30. This was included under current liability. Means what they are saying, already an option was granted, and how many options were granted? 1 lakh options were granted. At what exercise price? 30. And market price is what? 30. At what exercise price? 20, sorry, 20, and market price what? 30. What is the intrinsic value, badao? Intrinsic value is equal to 10. Correct. So can I say what they are saying? On 1/4/2001, employee exercise their options. Means can I say it is already vested? Totally vested means vesting period is completed. It means vesting period is completed. Are bolna? Vesting period is completed means can I say it will come in balance sheet as stock option outstanding account. So can I say stock option outstanding account will come with what amount? Batao. Stock option outstanding account will come with what amount? We have done ESOP. So of course stock option outstanding account will come in balance sheet, but they have not given the amount. So we need to find out the amount. So with what amount stock option outstanding account will come in the balance sheet? Amount batao. Total amount. There are three options. 1 lakh into 20, 1 lakh into 30, 1 lakh into 10. 1 lakh into 10, it will come with the value of option. What is the value of option? Either intrinsic value or fair value. So of course it is included in current liability. Means can I say what is the current liability? They have given current liability how much? Current liability they have given 4 lakh. They have given how much? Sorry. Current liability how much given? 70 lakh. So out of these 1 lakh into 10 means 10 lakh will be what? Stock option outstanding account. Understood? Means out of 70 lakh, 10 lakh is stock option outstanding account. My question to you all, stock option outstanding account will be shown under current liability or it will not be shown under current liability? The stock option outstanding account will be shown where in balance sheet? In liability. Where it will be shown? In liability? Or it will not be shown in liability? It will be shown in liability. Pakka? 100% wrong. 100% wrong. Open my notes. Open the notes whatever I have given. Accounting treatment note number 1 is given after point number B. Check karo. Oh, see the notes. Stock option outstanding account is a equity. Will be shown under the head reserve and surplus. Will be shown under the head reserve and surplus. I have seen. Means you have forgotten. You are not doing revision. Revision is compulsory, yeah? Revision is compulsory. Means can I say the amount is 10 lakh and one mistake is there? So we need to rectify that mistake. So while preparing the balance sheet, this should come where? Under the head reserve and surplus. Will be removed from current liability. Will be shown where? Under the head reserve and surplus. That we can do. But what they have given, check करेंगे. They have given on 1/4/2001, employee exercise their option for 50,000 shares. Means out of 1 lakh, only 50,000 exercise. Means 50,000 will pass the journal entry for exercise, and for 50,000 it will remain in the balance sheet. Means 50,000 into 10 will remain in balance sheet, and 50,000 into 10 will give a lot, will give equity shares. So we can pass that journal entry also. Very simple. Yes, sir. Then point number 3 is related to redemption or debenture chapter. Already I said in group 2 they can ask group 1. So if you have not forgotten, then we can do. If you have forgotten, then also we can do. Correct? So what they have given, included in his investment where investment in own debenture costing rupees 2 lakh, face value is 2.2 lakh. Means company has purchased their own debenture. Company has purchased their own debenture. Whose nominal value is how much? Whose nominal value is how much? 2.2 lakh. Purchase at what? Purchase at 2 lakh. Correct. It means what they have given, check करेंगे. Means out of 4 lakh debenture, out of 4 lakh debenture, they have purchased 2.2 at rupees what? 2, at rupees 2, and this 2 will come in the asset side of the balance sheet. This 2 will come in the asset side of balance sheet. So if you see, there is what? One non-current investment. Non-current investment is how much? 120 lakh. This will consist of investment in own debenture. How much? 2 lakh. Means out of 120 lakh, out of 120 lakhs है ना, figures are given lakhs now. So out of 120 lakh, 2 lakh is what? Investment in own debenture. Understood? Yes, sir. Now what they want to say about this, check करेंगे. These debentures were cancelled on 1st April 2001. So this debenture means the debenture which is already purchased. Now we need to pass a cancellation journal entry. So do you remember the cancellation journal entry? It is only what? Investment will be credited and debenture will be debited, and the difference will be transferred to what? Gain or loss on cancellation. Gain or loss on cancellation. Understood? Can we do that? I hope. Let's see we are able to do or not. So we are doing now buyback of equity shares. Question number 6. Question number 6. We'll pass an entry on 1st April 2001. There is a redemption journal entry. So we'll do 9% redeemable preference shares account debit. What is the nominal value of this? Nominal value is 20 lakh. Redeemable at what? Premium. Redeemable at what? Premium. So preference shareholders. Two preference shareholders. So redeemable at a premium of 10%. Means what is the payment? 22 lakh. And the difference will be premium on redemption of preference shares account debit. How much? 2. Got it? Any doubt? No doubt. Similarly, we'll do equity shares buyback entry. So we'll do equity share capital account debit. What is the nominal value? They have purchased 3 lakh equity shares or rupees 10 each. Means 30 lakh. Two equity shareholders, how much? Two equity shareholders, it is 3 lakh into 30 means how much? 90 lakh. And they will be what? Premium on what? Buyback of equity shares. That is what? 60 lakh. The premium on buyback is how much? 60 lakhs. Got it? This both premium will be written off. We write off against what? Do we have securities premium? How much securities premium we have? 60. But we want how much? 62. So we have insufficient. We have insufficient ना? अरे बोलना रे. Yes, we have insufficient security premium. Can we use free reserve? Yes, we can use free reserve to write off also. We can use capital reserve also. We can use capital reserve to write off this. Understand what I am saying? Are you able to understand? So let us write off. Or writing off we can do at the end also, because there may be some premium also later on, because point number 4 is for ESOP. So when ESOP will be issued, there will be at premium. That premium can be also used to write off. That premium can be also used to write off. So we can write off at the end also. Chalega? Correct. Now we need to create CRR. But how much CRR will be created? How much CRR is required? Bolo? CRR will be equal to what? Nominal value of preference share redeem and nominal value of equity shares bought back. So it is 20 plus 30. Means we should create a CRR of what? 50 lakh. From where? Revenue reserve. So revenue reserve account debit to CRR. How much? 50 lakhs. 50 lakhs. Correct. And now we can make payment. Let us do payment together. Preference shareholders and equity shareholders together. So preference shareholders account debit. How much? 22. And equity shareholders account debit, it is 90. So total payment is how much? Total payment is what? 102, 112. It is 112. Yes, sir. This you have understood. So we have done first point, second point. Only writing of premium is left, that we can do at the end. Now let us do cancellation. Cancellation journal entry. So we need to cancel. Batao. We need to cancel debenture. Debenture is 10% debenture. What is the nominal value of debenture cancelled? So nominal value is what? 2 lakh. Nominal value is 2 lakh or 2.2 lakh? 2.2 lakh. And investment is how much? Investment in own debenture is 2 lakh. Correct? Understood? Means debenture of 2.2 lakh is purchased and cancelled at 2 lakh. So there is a gain. There is a gain on cancellation. Bolo yes or no? So this gain on cancellation is transferred. This gain on cancellation is transferred to what? Capital reserve. This gain on cancellation will be transferred to capital reserve. So you can add profit on cancellation. Profit on cancellation of own debenture. Are you getting? How much? It is 0.2. 0.2. This point have you understood? Correct. Then coming to the last ESOP. So we have stock option outstanding account. Stock option outstanding account. But out of 1 lakh, 50,000 will be exercised. So we'll take 50,000 into what? 50,000 into 10 means 5 lakh. And then exercise money will be received. So bank account debit. So the bank account debit 50,000 into what? 20. Very good. It is 10 lakh. What will be allotted? Equity share capital. Nominal value is what? 50,000 into what? 10, 5 lakh, and the balance will what? Securities premium. It means 10 will be securities premium. 10 will be premium. And now you can see we have sufficient premium. So we can write off what? Premium on buyback and premium on redemption of preferences. I hope you are understanding. Correct? So can we write off now? Securities premium. How much is required? 62. To what? To premium on redemption of preferences. How much? 2. And to premium on what? Buyback of equity shares. How much? 60. Done. Any doubt? Simple. Have you understood? Good question, I will say. Simple. Can I say balance sheet you can prepare by your own? We'll only discuss balance sheet. Leave some pages for balance sheet. You can see, check करेंगे. You can see capital reserve is 8, opening balance. Then profit on cancellation is added. Means profit on cancellation is transferred to capital reserve. You can pass one more journal entry. Profit on cancellation account debit to capital reserve. That journal entry also you can pass. This you have understood? Correct. Then revenue reserve opening balance 50 and minus 50 because creation of CRR. Correct. Then securities premium opening balance 60. Correct. Then added 10 and deducted 62. So how much remained? 8. Then CRI is equal to 50. But in this, one more account will come. What will come? Stock option outstanding account will come. I hope they have shown where? They have shown in other current liability only. So that is not correct. That is not correct. So that will be shown under the reserve and surplus. What you should do? You should make one correction. Adjustment for ESOP outstanding. You should do 10 here. 70 minus 10. So this will become 60. Current liability will become 60. And you should add what? In reserve and surplus stock option outstanding account, it was 10. From this, how much removed? 5 is removed. So you can add what? 5. Where? In reserve and surplus. The total will become 66.2 plus 5. Understood this? Have you understood this? So stock option outstanding account will be shown under the head reserve and surplus as per the requirement of Schedule 3 of Companies Act also. Balance you can do. Have you understood this part? Only I just want to inform you reserve and surplus. Balance you can do by your own. बोलो. Done. So this chapter is completed. I think. Acha, one more point is there. Buyback is completed. Buyback is completed. But there is one more topic, and that topic is very important from examination point of view. Very small topic with one question, and that question has been asked in almost all exam. 5 marks question always in all exam. I don't know why they are asking. Means what is the importance? I don't know. Correct now. The topic is what? Let us come to the topic. Equity shares with differential right. Differential right. Normally what happen? Normally equity shares whatever is issued are issued with same right. Same right means same dividend right, same voting right. So suppose we started one company. I started one company, I asked you to provide funds. So can I say whatever right I will have, that much right you will also have? Means suppose for 1 share I am getting a dividend of 10%. So you will also get a dividend of 10% only. And if for one vote I will get one voting right. So for 1 shares you will also get one voting right. Correct now. So normally shares are issued with same voting right and same dividend right. But there is one special provision under Companies Act. We say that equity shares with differential right can be also issued. For example, if you say Reliance Industries, so can you say Mukesh Ambani must have more voting right? So because of that reason, some specific shareholders must have some special power. For that reason, equity shares may be issued with differential voting right. Differential voting right means different voting, different dividend right. Correct. Now, detailed discussion where you will do in Companies Act. Okay, now if you want to read, you can read all these points. These are not important from examination point of view. Only one question is very important. Example number 1 you can see what they have given. Equity capital is held by XYZ in the proportion of 40 is to 40 is to 20. Means all the equity share are held in this ratio. 40 is held by X, 40 is held by Y, and 20 is held by Z. ABC hold preference share in the proportion of 50 is to 30 is to 20. Okay. So there are some equity shareholders, there are some preference shareholders. If the paid up equity share capital of the company is 1 crore and the preference share capital is 50 lakh, so if paid up equity share capital is how much? 1 crore and preference share capital is how much? 50 lakh. Then relative weight in the voting right of equity shareholders and preference shareholders will be will be 2 by 3 and 1 by 3. Correct? Have you noticed 2 by 3, 1 by 3? Means it is how much? 1 crore. Equity shareholders have 1 crore and preference shareholders will is how much? 50 lakh. Correct now. So this become 2 is to 1. So their voting rights should be 2 by 3 and their voting rights should be 1 by 3. Understood this point? Yes, sir. So the respective voting right of various shareholders will be how much? So can you say X? X is the equity shareholders. So their voting right will be what? 2 by 3, but 40% of 2 by 3. So they have become 2 by 3. 40% of 2 by 3 is 4 by 15. So Y will be what? 40% of 2 by 3 and Z will be what? 20% of 2 by 3. Very simple. Very simple now. So this become the voting right of what? Equity shareholders. Similarly, if we want to calculate voting right of preference shareholders, it will be 50% of 1 by 3, 30% of 1 by 3 and 20% of 1 by 3. Hence their relative voting right weight are what? So we have calculated weighted, so it becomes simple. This is mathematics. It is 4 by 15 is to 4 by 15 is to 2 by 15 is to 1 by 6 is to 1 by 10 is to what? And then we can calculate ratio. So this become ratio of voting right. Correct now? Have you understood? Bolo. Correct. Let me take one question which has been asked in exam. Preference shareholders will have voting right if the dividend is not paid for a continuous period of 2 years. Correct now. So this all thing you will discuss under Companies Act. I am just taking from examination point of view. Okay. If they ask, we should do na. Understood? The preference shareholders will get voting right provided some event occur. Got it? Come to this question. Is that question? Question number 7. Similar question has been given. You can see exam November, Jan, December. All exam they have asked. 5 marks question. 3 marks. This we call free marks. Correct? So W, X, Y and Z hold equity capital in the proportion 40, 30, 10, 20. A, B, C, D hold preference share in the proportion itna, itna, itna. If the paid up capital of company is 40 lakh, equity capital is 40 lakh and preference share capital is 20 lakh. It will become what? 2 is to 1? Means 1 second 2 by 3 and 1 by 3. Correct? Find the voting right in case of resolution of winding up of the company. So in case of winding up of the company, what will be the what they are voting right? The same I think Karluna. Can you do by your own? 5 marks question, free marks. Can you do by your own? Simple. Same question will come. Only they will change the proportion and the capital. Correct? Got it? Super expected. Super expected question. With this we completed what? This chapter you need to read MCQs by your own. Any doubt we'll discuss. However, they don't ask MCQs in exam. So do MCQs by your own. This is only for understanding the concept. So some concept may be taken into consideration by reading what? These MCQs. So if any doubt we'll discuss. Nothing to worry. Chalega? Yes sir. Can we start a new chapter? If you permit. I don't want to start any lengthy chapter today. We'll start with a chapter known as internal reconstruction. That is in volume 3. Volume 3. Okay, you receive volume 3, don't worry. Internal reconstruction. Hmm? Hmm. You're not supposed to ask from me, you can go. Correct? Internal reconstruction. Very simple chapter. I already said that there are two chapters, amalgamation of company and internal reconstruction. Normally, if they ask question from amalgamation, they don't ask from internal reconstruction. If they ask from internal reconstruction, they don't ask from amalgamation. But there is no trend. Always trend are made for change only. It can be changed also. It might happen in your exam questions come from both. It might happen in your exam question does not come from both. So always we should expect the unexpected. Okay, na? So we need to do this chapter provided what may be the case of last attempt, whether asked or not asked, we will not see. Correct now. So internal reconstruction. What is the meaning of reconstruction? Dictionary meaning of reconstruction. To construct again. Why will go for reconstruction? Suppose there is an old building, why you will reconstruct it? It means there may be two reasons. Either the construction is required because old building become weak, or the value of building has gone down because it is old building and you know that if we reconstruct then the value may increase. If after reconstruction also value does not increase, you will not go for reconstruction, you will go for demolition. Correct now. Understood now. If there is no future economic benefit after reconstruction, then you will not go for reconstruction, you will go for demolition. Same thing happen with the companies also. The company may also become weak. When company will become a weak company? When it is a loss making company. Means it is making loss from the past many years. Correct now. From past making years, it is making huge losses. Understood? Therefore, such companies require reconstruction. Therefore, such companies require reconstruction. Now, if due to reconstruction, if the company's value may increase, then we'll go for, otherwise we'll go for liquidation, not demolition. Demolition. Demolition I have used for building. You are using for companies. How you will demolize? चलो ठीक है. But I hope you have understood the objective of this chapter. So whenever a company become a sick company means बीमार. बीमार means when it will have fever. When it will have fever? When it has huge losses accumulated from many past years. Correct? So such companies can undergo reconstruction provided if they have some bright future. Whereas if we'll go for reconstruction only when we'll have bright future. If you do not have bright future, there is no need to there is no need of doing reconstruction. So how will understand the company has bright future? The company will understand from the future project. It might happen right now. Suppose due to COVID-19, we are facing many issues in face-to-face classes. Understood now? And we have incurred losses in this business also. In face-to-face classes, we need to pay rent without any classes. Suppose we have taken a building on rent, so we need to pay rent even though there is a COVID. Otherwise, we need to totally vacant that building. Understood now? So we need to pay rent, but there is no face-to-face classes. In the last 2 years, we have incurred huge losses. Correct? But we know after COVID-19, we can once again reconduct the classes. It will take thorough of time, but after 1 year, 2 year, it might happen once again students start coming and we can earn huge profit. So we have a project in our hand. We have a project in our hand and that project may be profitable. Maybe, it may. The word is maybe. We don't know exact position, but the project whatever we have in our hand, that may be profitable project. And therefore, we require reconstruction. Why we require reconstruction? Just try to understand. Suppose there is one company. I'm just drawing one balance sheet. We are doing which chapter? Internal reconstruction. So I'm just giving one balance sheet to you. This is equity, share capital, 10 lakh. Understood? There will be debenture of rupees 10 lakh. There will be other trade payable of rupees 5 lakh. Correct? And there will be asset of what? Suppose 15 lakh. We can see asset, the total of asset is less than equity and liability. So it means there will be a loss. How much loss we have? It is 25 minus 15 means 10 lakh loss. Understood? So can I say from this balance sheet we can understood that it is a sick company. It might also happen that these assets are overvalued. It is quite possible overvalued. And suppose the current fair value of this asset is 10 lakh. So it means there are two type of losses. One is the past accumulated losses. Correct? Understood? And this is what? A loss due to valuation. So prima facie it is a company. It seems that it is a sick company. But suppose the future is bright. Future is bright. Then of course The directors of the company, whether they will decide to liquidate or to continue, they will continue. And believe me, any businessman, yeah, any owner, they will never decide to liquidate immediately. They will try, and if suppose at some point of time they will feel that now they cannot do anything, then they will liquidate. Because can I say this company was created with a dream. Understood now? So it is not easy to liquidate. And the future is bright, they will always decide to continue. Now future is bright, but they do not have funds, they do not have sufficient fund for that project, they require loan, etc. Now you only say whether any bank will give loan to this company. No, bank will not give loan to the company. Even the future is bright, because prima facie it looks this is a sick company, so no one will give loan. Understood? So what our Companies Act says, that as per Companies Act, what is it? That we can go for internal reconstruction, provided we have got the approval from High Court. If High Court has given approval, then we can do reconstruction of such company. Means High Court permission is required, and High Court will give permission only when the future is bright. Means they will check all the reports, etc., and then they will give yes, okay, you can go for internal reconstruction. You can go for internal reconstruction. Now one question is coming in mind. So why approval is required? Why approval is required? What is the need of approval? If sir, we want to go for reconstruction, do reconstruction. Now one thing is coming in your mind. So how to do reconstruction? So you are saying reconstruction. We will not. This is not building that will start reconstruction. What actually you mean by reconstruction? Now one question is coming in your mind. But I hope something you are getting what I want to say. What I want to say, this is a company whose past was not good, but future is very good. Future may be very good. May means as per director, it is very good. So that we require permission from High Court, and High Court will give permission for reconstruction provided future is bright. They will check all the viability report, etc., etc., etc. It is a long process for getting approval from High Court. Now, how to get approval from High Court? This is not my part. This is a part of company that refer that faculty. But once permission received, once approval received, then we can go for reconstruction. Now, one question arises: so why we need permission? Why we need permission? That as per Companies Act, we can't reduce capital. We have understood under redemption of preference share, we have understood under buyback of equity share that reduction of capital is actually not acceptable, and therefore we created CRR, But in this case, if you want to go for reconstruction, then it means the objective of reconstruction means to write off losses. So there are two types of losses. One is accumulated losses, one is this loss, overvaluation of asset. Correct. So how to write off these losses, that we need to understand. So if you want to write off, check karenge everyone. So can I say this asset will become how much? 15 lakh minus 5 lakh loss, it will become 10 lakh. Correct. And equity share capital, how much, that we need to write down? Debenture we need to write down, and trade payable we need to write down. Correct. Understood. And we will write off entire loss. Means one thing is clear, that now the total of the balance sheet will be how much? 10 lakh. Bolo yes or no? I hope you are understanding. And you can see we have removed what? Debit balance of PL account. Means we have written off what? Accumulated losses. But who will bear that loss? Who will bear that loss? The question is that whether this person will bear the loss, whether this person will bear the loss, whether this person will bear the loss. Understood? So what High Court says, if every parties are okay with reconstruction, then I will give approval. Means directors who want to undergo reconstruction first will call the meetings of this liability holder. They will take their approval. They will take their approval now. So suppose you are debenture holders, I call you, Sirji, we are going for liquidation. So they will ask why you are, sorry, we are going for reconstruction. So they will ask why you are going for reconstruction. I will say, sir, today's position is not good, but we have this project. The future is bright. You should be with us. Means don't leave us. Means some surety will give. So it means I want your approval. So because of that reason, directors will call the meetings of debenture holders and other liabilities. If they are okay, thank you very much. So we need to take approval of debenture holders. While taking approval, I will also negotiate with you. Means suppose you are debenture holders. I will say, Sarji, you can see today's the position is very bekar position. If company is liquidated, so we have nothing to pay you. You can see asset is only 10 lakh. Understood now? If I realize 10 lakh, then also how much I need to pay you? 15 lakh total. But we don't have the money. Means you need to bear a loss of 5 lakh. So either we will liquidate or wait for 5 years. We'll make it double. Have faith on us. For the past year also you were having some faith now. So have faith on us. I'm negotiating with you. Are we able to understand? This कहानी बना रहा हूँ. Understood? Means I'm just trying to convince you. And can I say, I will just give you my project report also, that this is the project report, just check it. We have so big plans. You need to stay with us. The venture holder say, okay. Well, okay, but do something now. Do something. Do something. So what you will do? What I will ask you to do? I will say your liability was 15 lakh now. Make it 13 lakh. What I will do against that? I will increase the rate of interest for you. Means can I say we are doing some arrangement with you? Arrangement. So if suppose, just try to understand, these two 15 lakh become 13 lakh and will increase rate of interest, suppose. So they will agree or not? Or we will convert them into equity shareholders, then they will also agree, because they know that in future will become the owner of the company, so will get more profit. So it means some negotiation will do, means some arrangement will do, and with that arrangement they will compromise something. This is known as arrangement and compromise. This you'll do in detail in law. I didn't see a final law. Understood? So out of total loss, what was the total loss? 10 lakh. This is 10 lakh plus 5 lakh. 15 lakh loss. How much loss? थोड़ा कम ही किया था, ज्यादा कर देना. What was total loss? 15 lakh loss. अरे बोलना रे. Oh, this balance sheet is not tallied only. I've given wrong balance sheet. You should tell it, na? Tell it, okay. Means out of 15 lakh loss, let me change the amount. Let us change it that they agreed with what? More कर लेते हैं. Suppose 7 lakh. So 15 minus 7 is how much? 8 lakh. Correct? Understood? Yeah. So how much they have reduced? They have reduced 7 lakh. In consideration of that, either will increase the rate of interest or will convert them into what? Equity shareholders. They will be ready. Will take their approval. That approval will be submitted to what? High Court. Now High Court will demand approval of equity shareholders also. And can I say equity shareholders will always agree? Why equity shareholders will have always ready? Because if the company is liquidate, they will get under. They will get under. So they will always agree. because they know that if future is bright, something they will get. It is better to continue, and the balance loss will be borne by whom? Equity shareholders. So out of 15 lakh, 7 lakh is borne by the venture holders and other liability. Balance is what? 15 minus 7 means 8 lakh. अरे बोलना रे. So this will be borne by whom? Equity shareholders. What was the equity share capital? 10 lakh. 10 lakh minus 8 lakh how much? 2 lakh. The equity share capital will become 2 lakh and balance sheet will tally. This is the way of internal reconstruction. Have you understood? Now, if this balance sheet is given to financier, can I say they will be ready with future project? Because you can see we have already removed losses from this balance sheet. If this balance sheet is given to whom? Bank. And the future is bright with a good project report, whether they were ready to finance or not. Yes, correct. This is the objective of internal reconstruction. Understood why permission of High Court is required? Because as per Companies Act, reduction of capital is not allowed. It is allowed only when it is permitted by High Court. So High Court will give permission of internal reconstruction means now we can reduce the capital. We can reduce the capital. Understood? Have you understood? Correct. What is journal entry? That will do nothing to worry. But have you understood the objective of this chapter? Now one question may come in your mind. Then sir, every company will do like this. And they can do fraud also. They will take loan of 500 crore and will become Vijay Malia. Understood? And therefore what High Court says, even though you become a reconstructed company and you can take loan from bank, but you need to inform to the user of financial statement that you are reduced company and you need to add and reduce to your name till the time High Court permit to remove it. Means you need to add and reduce after your name so that the bank can understand it is which company? Reconstructed company, and approval has been given by High Court. Understood? So this, if this name is, if this word has been added after name, so everyone will understand it is reduced company. So of course this company can't do fraud now. Now if bank is giving loan, so they need to investigate and give. They need to investigate and then give loan. Understood? So of course if the future is bright and High Court has given permission for reconstruction, so of course bank can also give finance. Understood? Have you understood? This is the entire objective of this chapter. Means can I say internal reconstruction is a scheme of reconstruction without going into liquidation? Without going into liquidation. There are two type of reconstruction. One is known as internal reconstruction, one is known as external reconstruction. External reconstruction is reconstruction with liquidation. So that is not covered in this chapter. External reconstruction will be covered in the amalgamation of company. We'll discuss later on. Understood? Can I give in writing whatever I have discussed? Later. Later. Then we'll go for liquidation. We will take permission from all the parties. If any party does not agree, then we do not have, we have only one option to liquidate. Correct now? So this chapter will have one assumption that all the parties agreed. If you are saying any party is not agreed, I will say go to liquidation. That is our next chapter, liquidation. Next chapter will do liquidation only. In this chapter, we'll take one assumption that all the parties have agreed for reconstruction. Understood? Otherwise, this chapter we cannot start. Got it? This point have you understood? Yes, sir. Point number one, write down. Reconstruction means reorganization of a company. Of a company. It is of two types. Point number A. First is known as external reconstruction. Correct? That on covered. This topic will be covered under which chapter? Amalgamation chapter. Correct? Follow. Got it? Point number B. Internal reconstruction. Madam. So, under such scheme, the objective of reorganization is achieved without going into without going into liquidation. Correct? Under this scheme, accumulated losses due to overvaluation of asset and past operating losses are written off are written off through what? Compromise and arrangement with creditors and what? Members of company after prior approval from high court. High court? Got it? Got it? Then add point number, how much? 2 na. Point number 2. Accounting treatment. Then first. Point number 1. Alteration of share capital. Alteration of share capital. First is known as alteration of share capital. Is write down. It means change in face value change in face value of share capital without any reduction of paid up capital. Correct. Means denomination of shares will change, face value will change without changing paid up capital. That is known as alteration. Correct. Madam. Alteration are of two types. Two types. Point number A, consolidation of shares. Consolidation of shares. Consolidation. Consolidation means what? To consolidate means to combine. To combine means two or more than two share will be combined and will become one share. That is known as consolidation. Understood? Correct? Write down. Example. Suppose number of shares is given, face value of shares given, and paid up capital is given. Correct? The number of shares is 10,000, face value is 10, and paid up capital is 1 lakh. Now, if you want to consolidate, so one thing is clear that paid up capital will remain same. What will change? Face value will change. It means, can I say, we can do in this way 10 shares of rupees 10 each will be converted into 1 shares of rupees 100 each. So we have consolidated 10 shares into what? 1. Means now face value will become 100 and number of shares will also reduce. The number of shares will become what? 1000. So this is known as what? Consolidation. Understood? So you can see in this what has been changed. You can see this has been changed. Are you getting what I am saying? What has been changed? This has been changed. This has been changed. But paid up capital remain same. Correct. So what will be journal entry for this? You can see amount remains same, but a class of shares has been changed. Now share capital of rupees 10 each, share capital of rupees 10 each is converted into share capital of rupees 100 each. So we need to pass one journal entry for every transaction. We need to pass one journal entry. So what journal entry will do? Journal entry will what? Share capital share capital of rupees 10 each. We write on of rupees 10 has been debited, and now it become what? 2 share capital. 2 share capital of rupees what? 100. And amount remain same. Means practically speaking, can I say in this way? Is share certificate need to be changed? Means shareholders will surrender share certificate of rupees 10 each, and company will issue share certificate of 100 each. This is practically speaking. Have you understood this point? This chapter is very simple, only there are some new concept that you need to understand. Means can I say in this way, consolidation means conversion of shares of smaller denomination into higher denomination. Can I say in this way, Radam? Radam. Consolidation means conversion of shares of smaller denomination into what? Higher denomination. Have you understood this point? Yes, sir. I said alternation are of how many type? Two type. One first one, have you understood? Correct. Got it. Second type will be reverse of this. What will reverse? Consolidation. Opposite word is what? When you are consolidating, combining. So reverse will be what? Subdividing. Means when you will divide one shares into two or more than two shares, that is subdivide. That is known as subdivision of shares or splitting of shares. We split one shares into two or more than two shares. Correct? Let down. Got it? So this was A. Write down point number B. Point number B. Write down subdivision of shares, also known as split shares. Correct? In this, if I take one example, example can be like this: number, face value, and what? Paid up capital. Correct? So suppose we were having 10,000 shares of rupees 100 each. So this become what? 10 lakh. Correct? Batao. In this case, after subdivision, paid up capital will remain same. What will change? Face value will change. So it will be conversion of shares from small higher denomination into what? Smaller denomination. If you want to change into 10, so now number of shares will increase, and now number of shares will become what? 1 lakh. Have you understood? This is known as splitting of shares. Split of shares. Correct. So in this case, what will be journal entry? Can a journal entry remain same? Same journal entry. Share capital of rupees what? 100 will be what? Debited. Amount will be 10 lakh to what? to share capital of rupees 10 credited and amount remain same. Super easy. Super easy, huh? Correct. Now, in this case, can I say it means conversion of shares with higher denomination into smaller denomination. Right down. Subdivision means conversion of shares of what? Of higher denomination into what? Into shares of lower denomination. Done. Understood. Simple. First point understood. Point number one. But in this case, there is no reduction of capital. What is the objective of this chapter? To reduce capital, and from reduction we should write off what? Losses. Means can I say this alteration will not help in writing of losses. Means for writing of losses we should reduce capital now. But in this case there is no reduction of capital. Are you getting this point? Have you understood this point? Means I said in this chapter what is the objective? To write off losses. For writing of losses, what we should do? We should reduce capital and liability. But with this alteration, there is no reduction of capital. Therefore, this is not useful for writing of losses. Got it? Correct. Second, Adam, point number two. Adam. Cancellation of uncalled capital. Cancellation of uncalled capital. You know uncalled capital? Bolo. Do you know uncalled capital? Let us take one example. Suppose number of shares, face value, and then around called up capital, and then around paid up capital. Suppose let us assume the number of shares was 10,000, face value is equal to 100, called up is 80, and this will become 8 lakh. Correct? Understood. Now one thing is clear that in this case, for a loss making company will the company will not call now because we are going into internal reconstruction. Therefore, they may decide to waive what? Uncalled portion. So if I cancel, if I cancel these 80, sorry, if I cancel this 20 uncalled capital, so 100 should become what now? 80. Means we have once again converted shares of 100 into shares of 80, and this will remain same. I hope you have understood. Number of shares also remain same, and this will become 8 lakh. Understood what we have done? So only changes in the class of shares. 100 rupees shares now become 80 rupees. Means can I say, can this will result in what? This will result in what? No, no reduction. No reduction of capital. No reduction of capital. Reduction of capital means what? Paid up capital will be reduced. but 8 lakh remain 8 lakh, so capital remains same. Capital remains same. Means can I say in this way, it is a conversion of partly called up shares into fully called up without calling any amount. This is conversion of what? Partly called up into what? Fully called up without calling any amount, without issue of bonus shares. Sorry, bonus call. I think you remember bonus call means without calling. Can I say this way? But in this case also what? The class of shares will change. From 100 now it become 80. Correct? So what will be journal entry? Whenever class changes, we should pass one journal entry. Share capital of this much debited to share capital of this much. Understood? So what journal entry will do? Share capital of rupees what? Badao? Of rupees what? 100 is debited means is converted into what? To share capital. Rupees what? 80? 8 lakh. Understood? If you see the difference between alteration and cancellation of uncalled capital, difference. If I say similarity, both do not result in what? Reduction of capital. But in case of alteration, number of shares will also change. But in this case, number of shares will remain same. This is the difference between point number 1 and point number 2. Got it? Correct? So in this write down cancellation of uncalled capital means conversion of partly called up shares into what? Fully called up. Correct? Understood? Simple. This also you have understood. But once again, can I say this point number 2 will also not help in writing of losses because there is no reduction of capital. There is no reduction of capital. So now last point number 3 comes reduction of what? Reduction of paid up capital. Reduction of paid up capital. In this item, point number A. Point number A, write down reduction of paid up capital. Reduction of paid up capital with change in face value. With change in face value means the class of shares will also change. There will be reduction and also changing class of shares. Got it? Let me take one example. Suppose number, face value, called up value, and paid up capital. Okay. Now, suppose before reconstruction, it was 1 lakh shares of rupees 100 each, rupees 100 called up. So this will be what? 100 lakhs means 1 crore na? 1 crore. Correct. Now, suppose we want a reduction of 20. We want a reduction in paid up capital. Understood? Means 100 will become 80. And with this reduction, we also change what? The face value. We want to change the class of shares also. It means what will be the after reconstruction? Bata? After it will remain 1 lakh shares, but the face value become what? 80. Called up become 80, and this become what? 80 lakh. Means what is the total reduction? Total reduction is what? 20 lakh, and this will be used to write off what? Losses. Understood? Have you understood this? What will be journal entry? Can you give me journal entry for this? Bata. Journal entry what? Bata. Share capital of rupees what? Of rupees 100 will be how much? 1 crore. Correct. Will now become share capital of what? Of rupees 80 means now 80 lakh. So how much difference? Here this reduction will be nothing but gain for company, because if shareholders reduce, it become gain for company. In this chapter, all gain, all loss will be transferred to a special account that is known as capital reduction account. Means in this chapter will not apply any accounting standard. Any gain, any loss under internal reconstruction scheme will be transferred to which account? Capital reduction account. Simple. Correct? Understood. So we'll debit which account? Sorry, we'll credit which account? Capital reduction account. To write down 2 capital reduction account. Got it? Have you understood this journal entry? Journal entry understood. Now there is one rule. Rule is what? Whenever class of shares changes, so always you debit old class and credit what? New class. You can see point number 1, point number 2, point number 3. In all cases, the class of shares changes from old face value to new face value. So whenever there is changes in face value, we'll say old face value account debit to new face value. Got it? Correct? Now, the next point, if you can give me journal entry for the next point by your own, means you have understood. Correct? I am just giving you the concept. Journal entry you need to give. Correct? So this was point number A. Then add point number B. Add reduction of paid up capital without what? Without changing what? Face value. Without changing face value. Write down. Number of shares, face value, called up, and paid up capital. Let us assume before reconstruction there were 1 lakh shares of rupees 100 each, of rupees 100 called up. So this is 100 lakh, is 1 crore. Correct. Now less reduction. Less reduction. So how much they want to reduce? suppose 20, but they don't want to change the face value. Face value will remain same. Means how much reduction? 20 lakh. 20 lakh reduction. So now after reconstruction, what will be the position? Position is 1 lakh shares of rupees what? 100. How much called up? 80. And it will become what? 80 lakh. You can see in this also reduction of capital but without changing face value. Understand the difference between A and B? A was reduction of capital with change in face value. This is without changing face value. If you give me correct journal entry, one chocolate right now. Raise your hand who want to give me correct journal entry. One chocolate right now I'll give. Raise your hand. Who want chocolate? Raise your hand. Huh? Raise your hand now first. You need to answer if I ask. Otherwise don't answer. Arey chocolate, raise your hand. Even though wrong, I am not asking chocolate from you na. Means if you are saying correct, you are getting chocolate. If you are not saying correct, you are not getting chocolate. Only that much. So what you should do when the question is asked with some incentive, you should always participate. It may be correct na. Batao. Who want chocolates? I am getting big hand from him, so I will ask him only because I am just want. I just always be happy when there is a smile in the face. Even though you don't know, you should have a smile. Correct na? Always a smiling face. Correct? You answer. Share capital account debit 1 crore to share capital reduction account 20 lakh 80 lakh. Me same previous journal entry. You are saying same na? Chalo. One answer I got. He said same. Any more answer? Same. You also feel same. Any different opinion? Bolo. Same. You also same. You also same. You also same. Same. अरे बोलना रे. चलो. If you are saying same means you have not understood till now. Just try to understand. Before this, I already have given one hint. Just try to understand. Whenever I will ask question, before that I will only give hint. It means you need to be concentrated in class. If you concentrate, then only you can apply that hint. Otherwise, hawa hawa ho jata. So normally I ask question to understand whether you are concentrating or not. And if you are not able to reply, means previous point you have not understood. You said yes sir, maja aa raha hai bas. Correct. It seems when I have said that point, everyone said yes sir, but you have not understood that point. What I have said, what I have said, कि whenever there is changes in class of shares, whenever there is changes in class of shares, means whenever there is changes in face value, then we'll say old face value account debit and new face value account credit. Then we'll do. Means when there is no change in face value, will you do old to new? Because there is no old, there is no new. Face value remains same. Means the class of shares remains same. It was previously also, now also 100. So will you change the class? When I am saying just try to understand. When I said this is rupees 100, this is rupees 80. So this is face value or called up value? This 100 rupees, 80 rupees denote face value or called up value? It is face value, and in this question the face value remains same. So how you have done 180? Means you have taken called up value. Means that is not correct. Means that time you have not understood when I have explained that point. Understanding. Correct. In my class I understood when you are beginning, when you are going to sleeping mode. Correct now. Correct now. What happened whenever we discuss much? When we discuss much, say in class, in CA interclass, normally I have seen the student go to sleep mode like this. धीरे धीरे the energy will be like this, but when we are discussing much ना, धीरे 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 क्या पढ़ा रहा रे, अरे अरे कहाँ फंस गया रे, and will become sleep mode. Now sleep mode means what? With open eyes, your eyes will be open, but your mind will be sleeping mode. बताओ ऐसा होता है? How many of you feel like this? ऐसा होता है ना? Everyone, even I. It is same. We Indians are same. We are not Pakistani ना. I know about Indians. All Indians are same. सबको होता. Correct ना? अरे बोलना नहीं. But when we'll do practical question ना, when we'll do practical question, then your energy will be high like this, or it will be constant. High तो बहुत कम होता है. Constant जरूर रहेगा. Are you getting? So whenever we discuss much, normally your mind becomes slow, but that should not be done. Because when we are discussing about concept, and that concept will be applied in practical questions. Correct now. So you can do practical questions once you have understood concepts. Are you getting? So suppose in any time when you are not able to understand, suppose I have said something, don't say yes till you understand. I know you are into sleeping mode because I have that much experience. I can understand from your face why you are saying yes, sir. Yes, sir. Yes, sir. Yes, sir. Correct now. Always yes, sir. चलो ठीक है. But I think that point already I have said before this question. So what I said once again, I said old face value account debit to new face value account credit. Means old face value will be debited, new face value will be credit. It means what? It means what? Equity shareholders will surrender their old share certificate. Means we will take back what? And will allot what? Therefore, old debited to new. But in this case, there is no need to convert because face value remain 100. Means share certificate of 100 is now also share certificate of 100. So will you do that change? No. Understood? So once again I have given hint. It will not be old face value. It will not be to new face value. Then what will be journal entry? Because there is a reduction. Share capital account debit to. बस हो गया. Just try to understand. If you apply, you will get. If you will not apply, you will not get. You need to apply. You all are same. You all are same. But then also out of you, someone will go to final immediately. You all are same. Believe me, you all are same. Are you getting? All CA inter student who is preparing for the exam are same. But then also you know one fact that everyone is not going to go, is not going to inter CA final. That is also fact. It means it means you need to change your approach of learning. Correct? Understood? Now, once you have given this journal entry by your own, then there is no rectification. Ha, I could have given also journal entry. If I would have given journal entry, then of course you would have understood, but only for a time period. Only for the time period. Time period means what? Yesterday I will ask, you will say yes. Then day after, sorry, tomorrow I will ask, you will say yes. Day after tomorrow I will ask, you will say yes. But then I will ask you, sir, हवा हो गया. Correct? But now I think you remember. Once again, I will say once again this point. In the previous case, they were changing class of face, changing class of shares with change in face value. Whenever there is change in face value, we'll do old face value account debit to new face value. But if there is no change in face value, it means there is no, or if there is no conversion of shares. Share certificate remains same. It means we need to only reduce. Reduce. Reduction will be transferred to which account? Capital reduction. So what journal entry? Share capital account debit to share capital of rupees what? बताओ क्या लिखे? Of rupees what? Share capital of rupees? Share capital of rupees. Of rupees means what is the class of these shares? 100 now. So share capital of rupees 100 is reduced by how much? 20 lakh na. Understood? Their capital of rupees 100 is reduced by 20 lakh, and this gain is transferred to what? Capital reduction. Have you understood this point? I hope you have understood. 20 lakh ray. So you missed the chocolate, huh? I was having chocolate. चेक कर लो. आपके लिए ला के रखा था. अरे कौन खाया? अरे पूरा full become half. If final student ना, in break they are eating. So I have chocolates, huh? I will ask question means I will give chocolates. Okay? So you need to next time I want to give chocolate. Means I am asking chocolate to give, and I will be happy if you take the opportunity to receive chocolate from me. Okay? Chalo. This you have understood. Alteration you have understood. Cancellation of uncalled capital you understood, and reduction you have understood. But you have understood that for this chapter, out of this 1 to 3, which is more important? Third is more important. Why? Because we want reduction of capital to write off losses. Now one question may arise, so why then alteration? In this chapter, why you are doing alteration? And I'm not asking right now. One doubt will come, why alteration? The objective is to reduce capital to write off losses. So why you are doing alteration? What is the need of this in this chapter? Correct now. This need just try to understand what is the need. Suppose everyone just try to understand. Suppose we have a share capital with different face value of rupees 10, of rupees 100, and of rupees 50. Suppose these are the equity shareholders of rupees 10. These are the equity share capital of rupees 50. And these are the equity shareholders of rupees 100. So we have three different class of shares. But if I will call meeting of equity shareholders, I will call all now. Means I will call all. I will not say class 10 separate, class 100 separate, class 50 separate. This is not possible because negotiation need to be done with all equity shareholders. So can I say I will call them? Now you only say in one meeting all are present whether negotiation is possible because some are of rupees 10, some are rupees 50, some are rupees 100. Whether negotiation is possible, negotiation is not possible in that one meeting. Therefore, before calling them, I will make them of same class. Either by alteration or by consolidation. Understood? Means either I will make them of rupees 10 or I will convert them into 100 or 50, whatever is choice. Means that we require either consolidation or subdivision. Therefore, this is important for this chapter also. Have you understood? Correct. Now, these are the three journal entry understood. Then add on point number 4. Point number 4. Other transactions other transactions related to internal reconstruction scheme. Now all this I will just give what? Transaction you need to give journal entry. Correct? The rule is what? Gain will be credited to which account? Loss will be debited to which account? Expense will be debited to which account? Income will be credited to which account? In this chapter, no accounting standard. Means once High Court has given permission for internal reconstruction, entire accounting standard Companies Act become null and void. Now you are not supposed to apply the Companies Act or accounting standard for internal reconstruction scheme. Correct? Madam. Point number A. Reduction in the claim of liability. In the claim of liability. But what would be the entry? Reduction in liability. बोलो Decrease in liability will be debited or credited? Decrease in liability will be debited. What journal entry? Liability account debit. Liability account debit to what? To capital reduction law. Law done. Point number B. Reduction in the claim of debenture holders. In this, there are two cases. Point number 1. Write down. With variation in rate of interest. With variation in rate of interest. Understood? Means suppose 8% debenture now become 10% debenture. Will increase the rate of interest with some amount to be reduced. Already I have said we'll do negotiation with debenture holders also and will increase the rate of interest. So what journal entry beta? Very good. Old debenture to new debenture and the amount reduced will be transferred to capital reduction. Write down. Old debenture account debit to new debenture to what? Capital reduction. Yes, sir. Point number 2. Without without variation in rate of interest. Without change in rate of interest. बताओ. Debenture account debit to? Yes. Debenture account debit to capital reduction. Simple. Simple. Then down C. Point number C. Reduction in the value of asset. Reduction in the value of asset. What journal entry? Capital reduction account debit to asset. Simple. Then point number D. Increase in the value of asset. They can be increase also. We know increase in the value of asset. AS10 says what? The gain will be transferred to which reserve? Hmm? Revaluation reserve. तो what जाना entry बताओ. Asset account debit to in this chapter will transfer this gain to which account? Capital reduction means will not apply AS10. Understood? Point number E. Payment of reconstruction expenses. reconstruction so of course when there will be reconstruction there will be many legal expenses incurred. You take permission of high court, there will be some lawyer fees, legal fees, etc. That is known as reconstruction expenses. बताओ what journal entry? What journal entry? Reconstruction expense account debit to capital deduction will credit. Capital expense will be gain. The thing can say expense will be debited, but first you will say expense account debit to bank and then capital reduction account debit to expense. Can I pass one journal entry? Capital reduction to bank? Because all expense will be debited to which account? Bank account. All expenses will be debited to which account? Bank account. ये तो आज आउटफ्लो हो रहा है बहुत. I should continue or discontinue? अरे बोलो. Discontinue. What I am saying, all expenses will be debited to which account in this chapter? So either you can pass two journal entry, expense to bank and then capital reduction to expense, or you can do directly one journal entry, capital reduction to bank. अब better write down two journal entry, then we'll compound it. ठीक है ना? So first journal entry will be what? Reconstruction expenses account debit to bank. And then second journal entry will be what? Capital reduction account debit to what? Reconstruction expenses. It is as simple as we do salary account debit to bank and then PL to salary. What is the compound journal entry you can do in exam? That also you write down. Capital reduction, because in exam normally we'll do compound journal entry with narration. Save time. Correct. Then write down next point. Point number F. Settlement of contingent liability. You all know what is contingent liability? Do you know what is contingent liability? Till now we have not in AS 29. In AS 29 we'll do this detailed discussion about contingent liability. But you know what is contingent liability? What is contingent liability? Which is probable. What is provision then? Means both are same. Provision means what? For future expenses. Contingent liability is for what? छोड़ दो. We'll do detailed discussion where? But I hope you know the term provision, you know term contingent liability. You all know that provision will come in balance sheet, contingent liability will come in disclosure. That much you know. Contingent liability is only disclosed in notes to account, but provision is recorded in our books of account. This much you know. अरे बोल दे. Then we can proceed. So we are saying settlement of contingent liability. Settlement. So it might happen during internal reconstruction scheme there was some contingent liability which requires settlement. बताओ. In this also there are 2 points. Point number 1. If settled by payment, what journal entry? Bank account debit. Bank account capital redemption. Reduction. Capital reduction account debit to bank, correct only. In this, when you are settling contingent liability, there is an expense. All expense will be debited to which account? Capital reduction account debit. Very good. Correct? Understood? Point number two, if if cancelled or waived. Understood what I'm saying? Means such contingent liability does not require payment, it is cancelled or waived. Then what journal entry? No entry. Very good. Excellent. Excellent. No entry. Normally student do mistake here because contingent liability is not yet recorded. So if it is cancelled, no entry. But if suppose creditor is cancelled, then creditor is cancelled means reduction of liability. Then we'll pass journal entry what? Creditor account debit to capital reduction. But contingent liability is not recorded only. The question of cancellation means no journal entry for cancellation. Understood. Good. I'm happy that you have given journal entry for this. But normally students do mistake in this point. Correct? Very good. Excellent. This also we have understood. Just write down one note for your understanding. Areas of preference dividend. Do you know about areas of preference dividend? What is the areas of preference dividend? Do you know? Which is not yet declared. Areas of preference dividend for cumulative preferences. Do you know cumulative? Cumulative preferences, do you know? Is a contingent liability. So normally in this chapter they give that area of preference dividend is cancelled, etc. So that you need to understand any areas of preference dividend is a contingent liability. Correct? Means preference dividend not yet declared, but because it is cumulative, so it need to be declared whenever equity dividend will be declared. So it is right now a contingent liability for a company. Understood? So area of preference dividend is shown as a contingent liability. So if it is given, it is paid or cancelled, then the above journal entry will be done. Got it? Yes, sir. Then point number G. For writing off, for writing off accumulated losses, correct? Fictitious asset and goodwill and goodwill. For writing off accumulated losses means debit balance of PL account. Okay, the objective of this chapter is write off that only. Correct. This you have understood. What are fictitious asset? Have you heard about this asset? Fictitious asset. Fictitious means which are not real. Means they are not asset but shown as an asset. Means which do not have any real value. For example, deferred revenue expenditure. Deferred revenue expenditure. Any expense, any expenditure which is not yet written up to PL account. However, nowadays there is no concept of deferred revenue expenditure. Means normally now such expenditures should not come in balance sheet. Means as per AS 26, such expenditures should be charged to PL account as and when they are incurred. Means there cannot be any deferred revenue expenditure. But in this chapter, I have seen normally they give fictitious assets. If such fictitious assets are given, it means they are expenditure which is not yet written off to PL. Means it is just similar to accumulated losses. So that should be also written off. Means suppose there are some preliminary expenses and preliminary expenses till now not charged to PL. means it will have some debit balance. The debit balance of such expenditure will be shown in the balance sheet in the asset side. But now there is no concept of such deferred revenue expenditure because AS 26 says it should be charged to PL as and when they are incurred. But if suppose in this chapter such expenditure are given in the balance sheet, it means these are fictitious assets which need to be written off immediately in this scheme. Understood? If given, not given. Thank you very much. Not given. Thank you very much. Correct now. Then goodwill. My question to you all, for this company which is a sick company, suppose goodwill is coming, so whether it is correct. You are doing internal reconstruction for a sick company and you are showing goodwill. Can I say it will not be correct? Therefore, this such company does not have any goodwill, and therefore entire amount of goodwill should be written off, even if question is silent, because the objective of this chapter is write off this only. So even if question is silent, can I say these all three should be written off? Correct. So now for writing of these, even if question is silent, the you write off by using which account? Capital, capital reduction account debit to what? Profit and loss account to what? Goodwill to what? Fictitious asset. In bracket you can add on fictitious asset means expenditure not yet not yet written off. Expenditure not yet written off. Understood? Correct? Understood? Have you understood about goodwill? Why we are writing of goodwill? But what about other intangible asset? Now question arises, suppose there are some other intangible asset in the balance sheet. Should we write off? No. That intangible asset will be written off only when it's specified in the question, because that intangible asset might have some value. But for this company, goodwill, the company cannot have goodwill because we are doing internal reconstruction for that. Correct now? Madam, one note. Other intangible asset will be written off only when specified in the question. Correct? Got it? This was point number G. Last point, Adam, point number H. For closing which account? Capital reduction account. Correct. Now, practically speaking, suppose the total loss to be written off is 10 lakh. Practically speaking, suppose total loss, because when you will go under this scheme, you know how much loss to be written off, because you need to file an application to High Court for writing of this much amount of loss. It means you know how much loss need to be written off. It means, can I say, you will reduce your capital to the extent of this? Means you require how much capital reduction account to the extent of 10 lakh? Means capital reduction account will be either equal to 10 lakh or more than 10 lakh. Practically it cannot be less than what? Practically speaking, capital reduction account will not be less than 10 lakh. Means, can I say, either after all this journal entry, capital reduction account will become zero, it will have surplus balance. Practically speaking, either capital reduction account will become zero, automatically it will become zero. or it will have some surplus left. Not understood. Means this is capital reduction account. We are debiting all loss यहाँ पर and we are crediting all gain. So this gain should be either equal to or more than what? Loss. This gain should not be less than what? Loss. If gain is less than loss, then why you are into this chapter? Correct now. Means either capital reduction account will become zero or it will have some surplus balance. It will have some surplus balance. Understood? So for closing capital reduction account, after passing all the journal entry, you should close which account? Capital reduction account. Either it will have zero balance or it will have some surplus balance. In rare circumstances, it may have some negative balance with deficit balance also. When question is not prepared by chartered accountant. अरे बोलना रे. If question is correct, it will either have zero balance or surplus balance. If it is coming debit balance with deficit balance, it means somewhere question is not correct. So what you will do? You leave the question. Or you write negative about ICI. What you will do? You know, do something correct. No, just write down. Point number one. If surplus balance, then this surplus balance will be transferred to capital reserve account. So what journal entry you will do? Capital reduction account debit to what? Capital reserve. Got it? Correct. Point number two. From examination point of view, if deficit balance, if deficit balance, then of course we should write off this also. Deficit balance we lost now, so we should write off. Now my question to you all: can we use securities premium to write off such loss? Can we use securities premium to write off such loss? Securities premium for how many purpose? Five purpose. First is what? For first one by one. First, for issue of fully paid up bonus shares. For writing off preliminary expenses. Then for writing off commission or discount on issue of shares or commission paid on issue of debentures. Then for writing off premium payable redemption of preference or debenture and for buyback of shares. 5 point is, can we use securities premium to write off this deficit balance? No, as per Companies Act, no. But why? What I said, once we enter into this chapter, all Companies Act, all AS become null and void. Means in this chapter you can do whatever you want to do. It means now premium can be used for any purpose. In this chapter only, once this scheme is completed, then once again we will start applying what? AS and Companies Act. Means can I say in this chapter we can use what? Securities premium. If it is not available, then other reserve, any other reserve to write off such deficit balance. Understood? Have you understood this point? Over. All journal entries over. Huh? Ah, zero means no journal entry. Then what will do? Zero entry means either surplus or deficit or zero balance, then zero balance. So nothing to do. Have you understood all the? Abhi right now we have done only theoretical discussion. Once you have understood journal entry, so it means how many journal entry we have discussed? Point number last point is what? Point number H. H means what? A, B, C, D, F, G, H. 7, 8 journal entries. 8 journal entries, chapter over. And a question of 15 marks may come from this chapter. If question is asked, it will be 15 marks or 10 marks. So 8 journal entries, 15 marks, simple chapter. Simple chapter. Only one concept is left that I will do after doing some questions. Correct? Understood? So can we take break? Okay. Can we take break? Okay. So balance part will do after break.